Hi. Indian stock markets have reached an all-time high today. The Bombay Stock Exchange crossed the magical figure of 30,000 just some time back. There has been a surprise rate cut from the Reserve Bank of India, which is very welcome, and they say that it is a consequence of fiscal consolidation path that the government laid out in the budget. Um, Now, in its monetary policy, just a little while back, RBI had refused to budge. They were maybe waiting for the fiscal consolidation roadmap to appear in the budget and then make its move. These moves are really welcome, but I have a comment to make. I mean, when you have a major monetary policy meeting, you must take advantage of that to announce steps that you need to make. Now, today was no monetary policy meeting, yet they have announced this. What happens is this tends to catch investors by surprise. And when you catch investors by surprise, this is the second time they have done in this year, then that leads to a wrong precedent because they are not sure at what point of time the RBI will announce its sudden measures. Everything has to be calculated. You do not keep on surprising markets so frequently. You just do it and as a matter of consistency, not as a matter of surprise. A great point about monetary policy is that it should be signaling the policy much in advance so that investors are never caught by shock. This is shock and awe. Anyway, as I said, it's a welcome move. The country needs to be jump started, so the cut in the interest rates is definitely welcome from every point of view. Looking at the budget, uh, Finance Minister Arun Jaitley had clearly mentioned that there would be no MAT on entities, foreign institutional investors, which are subject to capital gains tax exemption because of the double taxation treaty, for example, between India and Mauritius. Now, there are some issues about the residence requirements of these Mauritius entities which are investing in India. That's another matter. But once a rule has been laid out, and the intention of the government is not to levy MAT on these foreign investors on the capital gains which are subject to double taxation treaty, you cannot make it retrospective. So you see many foreign investors receiving notices, and not only that, they are being asked to cough up the money by the end of March, which is really a very short time frame. So the government needs to have its intentions very clear. Going further, the government has imposed a new tax in this budget, 2%, Swatchbar Tax, to clean up the country, apparently. Now, I think that's firstly a lot of money that people are being asked to cough up. Secondly, uh, in its objective of trying to levy this Swachh Bharat tax, I hope they don't end up making our pockets swatch or clean off all the money. There already are a lot of taxes, and the government should find other ways and means to clean up the country. Cleaning up the country should come as a method of feeling good about something and not feeling bad about having to cough up money and pay. There are various other indirect measures. They have enough money to be able to handle these things. It's the message that you're sending which is very important, not the intention otherwise. Now, there are other things like the debt markets in the world, which have been on a rallying mode for quite some time. Now, the rally which is going on in the debt markets is incredibly important for the investors, and one needs to understand that this is in the backdrop of good demographics. That the population which is getting old is trying to invest wisely, so they have something for the long haul, for the future. Secondly, one should also understand that these changes which are taking place are for the good of the world, because investment in debt is always going to be handy. You need to have investments in this format for a long period of time. But this rally in bonds, which is there, is definitely something which I think will change. There is a school of thought which says that the withdrawal of liquidity by the US Federal Reserve is going to be more than compensated by the European ECB trying to infuse more liquidity, the Japanese central bank infusing more liquidity, and so on and so forth. That is true to an extent, but then that would lead to further drop in bond yields as well, because a lot of the liquidity which is there is going to come from this bonding program of the various European nations. And therefore, I believe that the bond rally which is going on in the world stock markets has to come to an end someday. It is at an all-time high. The bond yields have fallen to an all-time low, and this trend cannot continue because history is bound to come back and have its play. So stay invested accordingly, plan your investments, and I see red on the screens. The global stock market should now begin to correct, and so plan accordingly. Take care, and happy investing. Bye bye.